behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for the session on service tax on overseas secondment of employees, ruling in the case of Northern Operating System. The session is organized under the aegis of Indirect Taxes Expert Committee of the Chamber. The Chamber expresses its gratitude and thanks to Mr. Shivdas, who is the co-chair of Indirect Taxes, and Senior Advocate Shivdas and Shivdas Law Chambers for accepting our invitation to address the members on this session. Thank you very much, sir. The session is moderated by Mr. Arun Ramachandran, who is the co-chair and as well as head taxation Tata Consumer Products. Thank you very much, sir. And the chamber also acknowledges the support from our member organizations for their annual sponsorship of the events, Messrs. Bueller, Fundermax, Wipro, MTR Foods, and Sona Group of Companies. Now I hand over the stage to Mr. Arun Ramachandran. Over to you, sir. Thank you once again.
Thank you, Rupa. Yes, I think the introduction was sufficient on the subject, so I'll not take much time. Mr. Shivdas doesn't need any further introduction to this audience. I suppose he's a known and his reputation precedes. So it'll be very interesting to hear Mr. Shivdas's point of view on the Supreme Court ruling. Though the ruling is in the context of service tax, it has an overarching implication. The Supreme Court has invoked substance over form argument. So I'm very keen to hear Mr. Shivdas's view on the subject. One admin point, we'll probably, Shivdas sir, if you're fine, we'll have the question and answers, the questions being posted in the chat window. We can take up the questions towards the end. I can read the questions, and if anyone from the audience wishes to raise a question towards the end, we can, after taking the questions from the chat window, we'll open up the house for any further questions, if that's fine with you, sir.
No problems.
Great. Over to you, sir.
Very good evening to all of you. Arun, you are able to hear me properly?
Yes.
I thank the BCIC for this opportunity to express my views on the decision of the Supreme Court in Northern Operating. As Arun pointed out, the decision does throw up a lot of interesting questions. And one of the, I think, most peculiar feature in this decision is that this does upset the view of a number of tribunal decisions on this issue. I am not able to recollect any decision of the tribunal which went against the assessee on this issue. Maybe the earliest or the one was about earlier one, but otherwise all the decisions of the tribunal were in favor of the assessee. In fact, in 2-3 cases, if I am not mistaken, the civil appeal of the department also was dismissed by the Supreme Court. And therefore, the view that has been taken now by the Supreme Court is completely different. And when we look at the decisions, while there is a very elaborate discussion on the various documents, the agreements that were placed before it by the department, in my view, which of course is limited to my understanding of this decision, vis-a-vis the provisions which I have examined, there are few questions which still are not, I would say, answered adequately in the decision, and therefore it doesn't in that sense completely settle the issue, though ultimately one would see that the Supreme Court decision says that secondment is indeed taxable. The secondment of the employees is indeed taxable under the service tax law, both pre-2012 and after 2012. Few questions raised still remain to be answered, and therefore whether there would be a situation of another decision taking a slightly a different view or answering those issues, confirming the same view, we are not too sure. So what we will do is, we will initially set out what the decision of the tribunal and the Supreme Court is, how they have gone about examining the facts and the law, and thereafter I'll put across my concerns of what issues needs to be examined and what is the way forward, both in the pre-GST regime as well as the post-GST regime. Because in my view, this could have an implication even into the GST regime. So I'll now, you're able to see my slides around?
Yes, sir.
Yes,
It's visible.
it's visible.
I will operate it from here. Is that okay?
Yes, sir.
Okay. You're operating. You're operating. Now, this is how we will look at. We will look at the facts of the case in Northern operating. Also look into maybe the global practice which all of us are aware. Then we will look into the definition of manpower recruitment service, which is the subject matter of dispute. Then the relevant provisions of the Income Tax Act or the Provident Fund Act, which is always pressed into service by the assessees in those cases. Then the findings of the tribunal. Then we will get into what are the contentions of the revenue before the Supreme Court, and ultimately the view of the Supreme Court. And once that is done, then maybe we will look into what is the way forward in a pre-GST regime as well as in the post-GST regime. Now, I can't operate this. If you look at the facts of Northern operating, this assessee was registered as a service provider under various categories, including manpower recruitment agency, business auxiliary, etc. And that is for his outward supplies. Now, this assessee was a part of the overseas group companies which secure contracts in respect of activities that are to be performed by highly trained and skilled personnel. Therefore, taking advantage of the globalized economy and having regard to the locational advantages, the overseas group companies or a company enters into agreements with its affiliates or the local companies such as the assessee for secondment of personnel. So this broadly are the facts in this case. Now, if you get into more detailed facts in this secondment is part of the global policy of the overseas employer loaning their services on a temporary basis. And the role of the assessee was to optimize the what they call as the economic edge to perform specific tasks given to it by the overseas company. Now, as part of this secondment agreement or as part of the total policy, there is a secondment contract that is entered into by the overseas company with its employee, the person who is being seconded, whereby the overseas company employees possessing the specific required skill are deployed for the duration the task is estimated to be completed. So what happens is you will have a agreement between the two entities. Let's assume an entity in US and an entity in India. So that agreement will be for providing various services. One of the agreements will also be for secondment of employees. In this case, there is also a separate, I would say, a communication from the overseas company with the employee who is seconded, that he is being seconded to the country like India and in respect of certain conditions. What are the salaries or whatever it is indicated in that. On cessation of the secondment period, they have to be repatriated in accordance with the global repatriation policy. Now, what is more important is that the seconded employee, for the duration of the secondment, is under the control of the assessee, that is the company in India, and works under its direction. Salary is paid to the seconded employee. Now, since these employees belong to different countries where social security benefits are available because they are the residents in those countries, are employed there, that social security benefit will continue to be available with them. Now, in respect of the salary that is being given, the Indian entity deducted TDS under section 192, plus in terms of the Provident Fund Act, there is also a contribution by the Indian company to the Provident Fund in respect of the employee's contribution. So significantly, three things which you should note: that this person works under the control of the company in India. Salary is paid to the seconded employee. Either it is paid to him here and then recovered from the foreign company, or in some cases we have seen it is paid to the seconded employee by the foreign company itself. But TDS in terms of the Income Tax Act, Provident Fund contribution in terms of the Provident Fund Act, all are being taken care of by the Indian company. What it therefore means is that the seconded persons are considered as employees of the Indian company under the Income Tax Act as well as the Provident Fund Act. So whether this should have been considered, or has it been considered properly, or there has to be a harmony between the manner in which these acts treat the persons here vis-a-vis the service tax law, is something which that needs to be looked into, which we will see as we proceed further in the decision. Now, of course, proceedings were initiated by the department on the ground that the activity of secondment amounted to import of service by the assessee from the foreign entity under the category of manpower recruitment or supply agency. And this is for the period October 2006 to September 2014. Now, this period is important because till 2012, you had a category as manpower recruitment or supply, and post 2012, categories were not available, but there was a specific exclusion for employment activities. We will come to it slightly later. Now, if you look at the global practice on secondment, most of the multinational companies having their companies in India has this practice of sending their employees on secondment. Now, the seconded employees will remain the payroll either of the foreign company, the Indian company will reimburse the salary, or sometimes there would be employees exchange program where of course no consideration would be involved. The seconded employees will remain the roles of the respective entities. Of course, now with all this work from home, etc., the services are getting received online from the foreign company employees. So various practices are available as far as the secondment is concerned. Yeah. Now, if you look at the definition of manpower recruitment agency, because these are all few small things which maybe could have been looked into much better, but let's have a look at the definitions. The taxable services, any service provided or to be provided to any person by a manpower recruitment agency, and that is in relation to the recruitment or supply of manpower temporarily or otherwise in any manner, and that's the meaning, that's the definition of a taxable service. And there is an explanation to it that says that for the purpose of this subclause, recruitment or supply of manpower would include services in relation to pre-recruitment screening, verification of the credentials, antecedents of the candidate, and authenticity of the documents submitted by the candidate. And what is a manpower recruitment or supply agency? That is any person engaged in providing any service directly or indirectly in any manner for recruitment or supply of a manpower temporarily or otherwise. If you look at the definition on a standalone basis, simple reading of it, it would mean that the manpower recruitment or supply agency has to be an entity that is engaged in providing this service. Normally, the expression engaged in providing any service would mean that its business has to be one of providing service relating to recruitment or supply of manpower. Now, whether a foreign company that provides employees on a secondment can be considered as a manpower recruitment or supply agency, that is, whether it can be considered as engaged in the business of providing any service, etc., is the first factor that ought to be seen. Anybody providing a service in respect of recruitment or supply, whether that person would be covered as a manpower recruitment or supply agency, or should it be his usual activity of providing this service? That's the meaning according to me, or the scope that is being defined even by the definition of a manpower recruitment or supply agency. Now, when you look at the taxable service, it is in relation to the recruitment or supply of a manpower. Now, this recruitment, all of us would know, starts from, as the explanation indicates, the pre-recruitment screening, then examination of the credentials, antecedents, documents, etc., and supply of a manpower. Now, this or supply of a manpower, is it to be simply considered that when I give somebody to another company, I am doing a supply of a manpower, or should I have a situation where it has to be read in consonance with what the earlier expression recruitment would mean? In other words, the supply of a manpower has to be by an agency that is engaged with the business of providing any manpower service. So these two to be read together would mean that it has to be an agency that is doing a manpower recruitment activity, the usual business, and then when it is providing this service, it has to be something in line with what is considered as a recruitment activity. So recruitment or supply would mean that it has to be in consonance with the original intention of this particular agency. Now, if you look at the two circulars that have been issued, all of them specifically say that what is the scope of this manpower recruitment or supply agency. In fact, the circular of 2005 specifically says that it would include staff who are contractually employed by the recipient and come under his direction. So he should be contractually employed by the recipient and should come under his direction. That is how the manpower recruitment or supply agency would be, which is what is reinforced by the subsequent circular. Now, post 2012, once the general categories went away and the definition of a service would consider any activity done by one person to another, there was a specific mention in the negative list to say services provided by an employee to the employer in the course of employment are kept outside the ambit of definition of service. So two things all of us should note. One, for the period prior to 2012, it has to be a manpower recruitment or supply agency who would be the supplier of service. And what he should provide has to be an activity in relation to recruitment of manpower or a consequential supply of manpower. For the period post 2012, the services provided by an employee to the employer is kept under the negative list. In other words, any amount that is considered as a salary to the employee will be considered as a reimbursement or a consideration paid to the employee for a service which is not taxable under the Service Tax Act. It is kept under the negative list. So if the employee's activity is not considered as taxable, the amount that is considered as salary to that employee can also not be taxed under the negative list. That's the fallout of keeping the employees' activities outside the purview of definition of service. So pre-2012, we have the category itself indicating what can get covered, and post-2012, the exclusion or the mention on the negative list would mean what is considered by the employee to the employer will not be considered as a service. We need to have this in mind when we look at what the Supreme Court has said, or what the tribunal said and what the Supreme Court has said. Yeah. So this is what I was pointing out. Definition of service: any activity carried out by a person for another for consideration. So the foreign company providing a service to the Indian company can get covered under an activity carried out by a person for another for consideration, but shall not include, kindly see clause B, a provision of service by the employee to the employer in the course of or in relation to his employment. So, as a matter of declaration, the employee's activities, employee services are excluded from the definition of service. If that is so, then an amount attributable to that employment, in whatever manner, either it is paid to him directly by the Indian company, or paid to him by the foreign company, or taken as a reimbursement from the foreign company by the Indian company, can that be taxed under the category, under the service tax liability, is the question that needs to be looked into. Now let's look at some of the other acts where the employees categorization also is made. For example, under the Income Tax Act, whenever a salary is paid to the employees, then certain deductions are always made, considering them to be the employee of the Indian company. Otherwise, you don't give a form. In fact, the Supreme Court decision specifically notes this, that there are some forms that are being given to the seconded employees in terms of the Income Tax Act. So you don't give a form to an employee, to a person, unless he is an employee of the Indian company. So therefore, that is one aspect that needs to be kept in mind, that there is indeed a consideration of that person as an employee under the Income Tax Act. If you look at the Provident Fund, that also says that the definition of an employee would be this: a person who is employed for wages, includes any person who is employed through a contractor. So even by virtue of this, a temporary employee and the deputed employees are also eligible for Provident Fund, and that's how even the Provident Fund is being deducted and paid up to the Provident Fund account in terms of what is the requirement in law. So two things we should have in mind: the Income Tax Act requires the deduction of TDS. The Provident Fund requires the amount to be paid to the Provident Fund for these persons on account of the fact that the employees under the laws applicable to the group companies abroad were required to do it. So on an exhaustive examination of these documents, the tribunal came to a finding that there is no manpower recruitment, manpower supply service pre-2012 and post-2012. And more significantly, the tribunal in this case relies on earlier decisions of the tribunal in Volkswagen, then in Honeywell, to say that in all these cases, the tribunal had taken a similar view. Some of the civil appeals were indeed dismissed by the Supreme Court, and therefore the view that they are taking now is in consonance with the view that has been taken earlier. Now let's look at the contentions of the revenue before the Supreme Court. I have more or less tried to capture most of these submissions in these slides so that in one place we are able to really see what the revenue has said and what the Supreme Court has said. I have gone into some details in the paragraphs so that all of us would know how the Supreme Court has approached the matter. The first contention of revenue was that you look at the overall reading of the master service agreement, the secondment agreement, the employment agreement, all of them indicated that the overseas employer provided the services of its employees to the assessee for the performance of agreed task. No difficulties. The tasks are handed over to the assessee by the overseas group company, and the assessee was not deciding the manner of performance, which was, I thought, was slightly different from the manner in which it operates. Because once they come here, while there could be a situation where the activities could be made known to both the companies, but I think the appraisal, the manner in which it is being done is always looked at by the Indian companies. So that is one aspect which from the Supreme Court, the revenue's contention was slightly different. The consideration provided to us was fixed, 15% markup over the actual cost incurred, and the cost incurred included the remuneration which was nominally paid with assessee to the seconded employee, and these were reimbursed. So there were two things. If the salary that is paid to the seconded employee is, let's assume, about $100, the consideration that was provided by the foreign entity to the Indian entity and agreed was 100 plus 15%. So 15% was the markup. That was the general amounts that were to be paid for all the services being rendered. But as far as the salaries were concerned, these were collected in terms of the actual amounts that were paid to the employees. Now that will have some impact as we go further in the discussions. The revenue also argues that a temporary period, the seconded employee was working under the assessee. There is no dispute on that. The revenue, however, submitted that this arrangement was essential because without such control, it could not have been practical for the assessee to have ensured performance of the task. The revenue therefore agrees or argues that a combined reading of the materials and record clearly established that the arrangement between the assessee and its overseas company was one of a contract for service, and in effect what was provided was services through its employees, and the services directly pertain to the discharge of functions of the assessee. Now there were few things which the revenue pointed out, which according to them the tribunal had not considered properly. That the mere fact that the temporary control over the manner of performance of the duties of the employees did not take away or diminish the fact that their real employer was none other than the overseas company. So that's where the revenue makes a distinction, that while you may consider, you may second him here, but in reality he is the employee of the foreign company, even though you may consider him to be an employee of the Indian company for your income tax purpose, for your provident fund purpose, but otherwise he is really an employee of the foreign company. And the scale of payments made to such seconded employees were of a higher magnitude. And the real reason was to ensure that their expertise was utilized for the performance of activities. The salaries, allowances were all determined by the overseas employer. And after completion of the assignment, the seconded employees were to return to their original positions in the overseas company. And the control which the assessee exercised was for a very limited duration. It was not entitled to impose sanctions such as cut in salary, etc. And therefore, the contract was one for supply of service by the overseas company. So therefore, there were two things which the revenue argued. One, it is considered as a supply of service by the foreign company to the Indian entity. And therefore, it took the argument slightly to a higher level as compared to what exactly was the case that was set up at the tribunal stage, where it was specifically a distinction was made between pre-2012 and post-2012. Pre-2012, whether it is a supply of a manpower recruitment activity, and post-2012, when there is an exclusion of the services rendered by an employee to the employer, how can it be taxed? It therefore took the argument to a higher level that between the entities, it is a service, it's an agreement for providing service, and in that service, this secondment also forms a part. Now, with all this, the Supreme Court frames basically two issues. Whether the activity of secondment of employee by the overseas company would qualify as a provision of service to the Indian entity, whether the Indian company can be treated as an employer of the seconded employees. Now, there are few tests which the Supreme Court lays down, or rather looks at, while examining the various agreements. And various decisions also were looked at by the Supreme Court. And each one of the tests the Supreme Court examines. Very interestingly, the Supreme Court says that test by itself will not be conclusive. The Supreme Court also says a combination of all these tests also may not be so much a decisive factor to see whether there is really an employment service, and finally comes to the conclusion that in the given set of facts in this case, a combination of all these tests would mean that there is a supply of an employment service by the foreign company to the Indian entity. That's how the whole conclusions are gone. Now let's look at the test. Disbursement of salary, is that relevant to decide whether there is an employee-employer relationship? Master-servant relationship, how is that satisfied or required to be satisfied? Control test, who is controlling, how much is the control, is that decisive? Or payment of a remuneration, payment of salary remuneration, sufficient degree of control, or asset ownership or profit, economic reality test, nomenclature test, and integration test. In my view, I think instead of confining it to the issues regarding the applicability of the category of supply of manpower and the exclusion post 2012, in my humble opinion, I think the Supreme Court has gone into a much larger area of examination in terms of each one of these tests, and then try to apply to this case to see whether there is a taxability under the service tax law. Don't sleep. Now, various tests that were discussed by the Supreme Court to discern an employer-employee relationship was this. It is all right. The first decision which the Supreme Court looked at was the test and the decision was in the case of Volkswagen, which in fact was in favor of the assessee and then confirmed by the Supreme Court. The method of disbursement of salary cannot determine the nature of transaction. Therefore, while that by itself can be a factor, but that completely cannot be considered to be decisive to decide the nature of transaction. Then they looked at the decision in Dharangadhara Chemical Works, where with reference to the activities being done by the job worker, contractors, etc., the master-servant relationship was examined and said that by itself is not decisive to see who is a master and who is a servant. Similarly, United BD's case to say whether the hirer is really having an authority to control the people who are hired, or the three-tier test is laid down by some of the English decisions, like whether wage or other remuneration is paid by the employer, whether there is sufficient degree of control by the employer, whether there are other factors, whether they are elastic enough to apply to a large variety of case. So all this individually has been looked at by the Supreme Court, but not applied exclusively. It's not one factor that has been applied by the Supreme Court. Yeah. Or for example, as I pointed out earlier, an asset ownership for profit or loss, or economic reality test, nomenclature test, or for example, an integration test, whether an employee is integrated to the employee's business or is a mere accessory. All these tests have been examined by the Supreme Court, and they have said that we will look at all these tests. And finally, very interestingly, comes to the conclusion that no one test of universal application can ever yield the correct result. So they don't take any one test and say we will apply this test is applicable here, and therefore you are considered as an employee. That's not the way they proceed. Supreme Court says it is a conglomerate of all applicable tests taken on the totality of the fact situation in a given case that would ultimately yield, particularly in a complex hybrid situation, whether the contract is to be construed as a contract of service or a contract for service. Whether it is a contract of service or a contract for service. So if you look at the manner in which the Supreme Court proceeds, they say that we will apply all the tests together. We'll take all the tests and then apply to this particular case. Therefore, the concern would be that whether in every case that will go to the Supreme Court, especially in a matter where you are taxing it based on a particular definition in a category, you are trying to tax it based on the inclusions and exclusions in these definitions. Are we to look at a different number of tests to see whether you are taxable or not? Because in my view, this goes slightly different from the earlier views of the tribunal. In earlier views of the Supreme Court, for example, in the case of Sushil Kumar and all that case, where they say that when you are trying to tax somebody, either he is in or he is not in. You don't apply an interpretation to see whether he is in and whether he is to be taxed. Unlike the case of an interpretation of a notification, where you can always see the intentions, etc. But in the case of a charging section, when you want to tax somebody, you look at it very strictly in terms of the definitions that are sought to be applied, the categories that are sought to be applied to him, and then find out whether he is within the definition or not. To apply a conglomerate of situations, conglomerate of tests, and then apply it to a particular agreement, series of agreements, etc. is for the first time being given by, if I am not mistaken, being done by the Supreme Court in a service tax matter. Now, applying this, what does the Supreme Court do? The Supreme Court finds that in this case, the overseas company assigns certain tasks to the assessee, for which the assessee is paid a markup of 15% of the overall expenditure. The overseas employee is temporarily loaned to the assessee. Assessee has control over the employee. The overseas employer pays the seconded employee, which is reimbursed to the overseas company by the assessee. In my view, whether the overseas employer pays to the seconded employee or the Indian company pays to the seconded employee would be of less significance, so long as that person is considered as an employee and what is paid to him is the salary. Now, the secondment is for a specific duration, and the assessee during this time is responsible for the work of the seconded employee. That is the Indian entity. The letter of understanding issued specifies the tenure during which the employee is undertaking. The nature of salary and other perks underscore the fact that the seconded employees are of a certain skill. I am not too sure how many of these conclusions are really, would that be so much relevant to decide whether the service tax would be liable to be paid under a particular category of recruitment, manpower recruitment, or would it be required to see whether the exclusion post 2012 would apply. Now, this is the final conclusion effectively being done by the Supreme Court. The overall effect of the 4 agreements entered by the assessee at various periods clearly points to the fact that the overseas company has a pool of highly skilled employees who are entitled to a certain salary structure as well as social security benefits. These employees, having regard to their expertise, are seconded. But the control and the right to ask them to return if their functioning is not as desired is with the assessee. The overseas employer is in relation to the business, deploys to them to the assessee on secondment. The last portion, the mere payment in the form of remittances or amounts by whatever manner, either for the duration of the secondment or per employee seconded, is just one method of reckoning if there is a consideration. The other way of looking at the arrangement is the economic benefit derived by the assessee, which also secures specific assignments. So, holding all this into account, the Supreme Court comes to the conclusion that in this case, tax liability is there under the category of manpower recruitment pre-2012 and as a general definition of a service after 2012. Now, interestingly, what the Supreme Court has done when it was pointed out that identical facts, there are orders of the SESTAT that have been affirmed by the Supreme Court in the case of Volkswagen, in the case of Computer Sciences Corporation, and therefore, and these are, if I am not mistaken, civil appeals being dismissed by the Supreme Court. As all of us are aware, when you talk about a civil appeal being dismissed, the concept of the doctrine of merger will always apply. So it's as if the tribunal decision is affirmed by the Supreme Court, unlike a special leave petition where all that the dismissal would mean that the Supreme Court is not interested in interfering with the decision. They are not confirming on merits whether the decision of the lower court is right or not. But in the case of a civil appeal, the affirmation or the dismissal of the civil appeal would mean that the tribunal decision is affirmed by the Supreme Court, concurred by the Supreme Court. So when that was pointed out, very surprisingly, the Supreme Court says that because of the reasons of overall reading of the agreement, etc., where if I am not mistaken, even the other matters, all these agreements are identically worded. The orders of the SESTAT affirmed by this court are unreasoned and no precedential value. That's the observation given by the Supreme Court, which is slightly definitely concerning. And therefore, they hold that in this case, service tax liability would be there. Now, as far as the exclusion, that the employee services were to be excluded or were declared as part of or it was excluded from the definition of service. Interestingly, the Supreme Court says that this court had to deliberate whether in the present case the second employees can be excluded in the light of the negative list regime that was introduced in 2012. In order to do so, it first analyzed the nature of the relationship between the assessee and the second employee, and if the assessee qualified as the employer of the second employee. Now, having taken this, the court says, this court opines that with the existence of a negative list regime, the main issue for determination is that of the employer-employee relationship. And once the court held that the assessee was not the employer of the seconded employees, then the exclusion provision would stand inapplicable to the assessee. Now, there are two things that comes out of this. One, either is an employee of the Indian company or an employee of the foreign company. Either way, if he is going to be an employee of Indian company or a foreign company, can it be said that only if you are an employee of the Indian company this exclusion would apply? And if you are an employee of a foreign company, which admittedly the Supreme Court holds it to be, and the consideration that is paid is exactly for the salaries, keeping apart that 15% apart, is for the salaries of these employees. Can it still be said that we will ignore the fact that there is an exclusion? They will ignore the fact that the amounts that are paid is towards the salaries of these employees and still tax them under the guise that it is a service being provided by the foreign entity to the Indian entity. What happens to the other parallel acts where the seconded persons are considered as employees, TDS deducted, provident fund given? What happens to those considerations? Unfortunately, these issues I did not find has been addressed adequately in my humble reading of the Supreme Court, has not been addressed by the Supreme Court. One other issue which I was trying to find out and first was argued vehemently before the Supreme Court was that ultimately what is getting reimbursed or what is collected by the Indian entity from the foreign company was the salaries relating to the employees. Now, and there was no markup in terms of more than the salary. So if $100 is the salary, what was collected was $100 and there was no markup on that to say that the character of a salary is not being given to the consideration. Now, there we did not find a satisfactory answer by the Supreme Court. All that they say was that one of the arguments which I have reproduced here, paragraph 58, one of the arguments of the assessee was that the argument was manpower, yet it was not required to pay any consideration to the overseas group entity. The mere payment in the form of remittances or amounts, by whatever manner, either the duration of the secondment or as per employee seconded, is just one method of reckoning if there is consideration. The other way of looking at the arrangement is the economic benefit derived by the assessee, which also secures specific jobs or assignments. The quid pro quo for the secondment agreement, where the assessee has the benefit of experts, is implicit in the overall scheme of things. This observation, in my view, doesn't really answer the question as to what is the consideration being paid by the foreign company to the Indian entity or the Indian entity to the foreign company for receiving these services. This is more to do with the ultimate benefit of the employees being seconded. But to be taxed under the service tax law, unless there is a specific consideration being identified and paid by the service recipient to the service provider, the question of taxing them under the category of service tax law does not arise. In fact, during a particular time, even reimbursements were also not subjected to levy of service tax. Now, this is something which I did not find much of a discussion in the Supreme Court decision. Now, what was also argued before the Supreme Court was that ultimately look at the whole situation. Whatever tax is being paid is available as credit to the Indian entity, and therefore, in that sense, there is no loss of revenue to the government. Because this was pointed out for two reasons. One, that therefore there can't be an intention on the part of the assessee to evade payment of tax, and the other, ultimately it's a revenue neutral situation, and therefore even dehors the limitation, dehors the longer period of limitation being invoked. This can't be a situation where you need to pay tax, but because you pay tax and you yourself take credit. Now, there, if you look at the findings of the Supreme Court, it's more things have been said or unsaid, we are not too sure about it, because the Supreme Court says, as regards the question of revenue neutrality, the assessee's principal contention was that, assuming it is liable on a reverse charge basis, nevertheless, it would be entitled to a refund. It is noticeable that the two orders relied by this court merely affirmed the rulings of the sestat without any independent reasoning. Their precedential value is of a limited nature. Then the Supreme Court goes on to say that this court has been called upon to adjudicate about the nature of the transaction, that a particular rate of tax or no tax is payable, or that if when and when liability arises, the assessee can, through a certain existing arrangement, claim the whole or part of the duty as refund is an irrelevant detail. I'm not too sure how these observations can open up a Pandora's box for the future, because there are a lot of cases where we have argued and said that if it is revenue neutral, you can't have a longer period being invoked, and therefore the 5 years time limit cannot arise. So whether this observation can be used against the assessees to say that what you are arguing as a revenue neutrality is really an irrelevant issue as far as the taxability is concerned. Because ultimately the Supreme Court in this case holds in favor of the assessee on longer period, not on revenue neutrality, but on the fact that subsequently the authorities themselves took a view in favor of the assessee, and there were tribunal decisions in favor of the assessee, and therefore they have said longer period will not apply. Otherwise, as far as revenue neutrality is concerned, the issue can still get opened by virtue of these observations. So ultimately, this is what the court has held. The assessee was the service recipient for service of manpower recruitment by the overseas entity. With respect to the employees, it's seconded to the assessee for the duration of their deputation or secondment. Now, what is the way forward? Now that the Supreme Court has said that the secondment is to be taxed under the category of manpower recruitment prior to 2012 and after 2012, for all of us where matters are pending at different levels, what would be the way forward in respect of these matters for pre-GST regime? Now we need to look at the individual facts of the case to decide the taxability of secondment arrangement, including the terms and conditions of the contract between the entities for the secondment of the employees. Is there a separate contract between the seconded employee and the foreign company, the Indian employee and the foreign and the seconded employee? How is it going to span out in respect of each of the phase? Because somewhere the Supreme Court seems to have said that their view, while it is broad-based, needs to be looked into in terms of the facts of this case, and therefore is it still possible to argue that the facts of a different case that secondment cannot apply, secondment cannot be taxed? The exclusion specifically post 2012 of the services rendered by an employee to the employer, in my view, needs to be re-examined by the Supreme Court, because otherwise the exclusion by itself would be of a very limited application. The question would be, is it therefore a situation where employee and employer both in India, and it is only their activities being excluded and all other similar type of activities would get taxed? That is one thing that needs to be examined. The point of consideration from the service recipient for the supply of service, that according to me again has to be reconsidered or examined by the Supreme Court. Now, whether paying tax and taking credit, seeking refund is going to be an option, because in such of those cases where the facts are identical, is that option available? Now, if you pay tax and take credit today, how will the credit come to you? Because all your GST, your TRAN1, everything is over. So would you get a cash refund of these credits that are available, that would be available to you? In any case, longer period of limitations cannot be invoked in any of these matters. So this needs to be, these are some of the points that need to be looked at by all of us for all those cases where we are still in pre-GST regime. Now, post-GST regime, it can still have some impact, because while the exemption for services provided by the employee to the employer continues to be outside the tax net by virtue of entry in Schedule 3, but whether the secondment in view of the decision of the Supreme Court would be covered by this exclusion in Schedule 3 is something that needs to be looked at, especially because in Schedule 1 you have a situation where if it is an import of service from a related group company, and even if it is without a consideration, then can it be taxed in terms of Schedule 1 is one issue that can really come up. Now, suppose we decide to pay the tax. Can you get the credit now? Where will the credit be available? Will you be hit by the time limits in terms of Section 16, then all the time limits in terms of returns, whether that credit will be available? And even if you pay the tax and the credit is available, will interest be a cost? Because at the end of the day, if you are liable to pay from 2017 onwards till 2022, because your normal time limits of 3 years and 5 years will be from the date of your annual return. And if for 17-18, if your annual return, the last date was in, I think if I'm not mistaken, in 2020. So you still have time till 2023 or 25 for the notices to be issued even for a normal period. So these are all some of the questions that can come up even in the post GST regime. Somebody had asked me whether this decision will have an impact in the case of in view of the advanced ruling in Colombia Asia. In my view, Colombia Asia was on a different point where different entities, that is different units of the same entity, being considered as different registrants, whether that would be considered as providing service from one registrant entity to another entity. It is not with reference to the employees. All that it would mean is that this decision can to an extent help us in saying that there is indeed a tax of employment that is there. Therefore, employment is not to be considered as taxable even between the registrants of different states. What can be taxed can only be the service provided by supply of service by one registrant to another registrant, excluding the work of employment. To that extent, it may help us, but otherwise, in my view, it may not really impact the decision of Colombia Asia. Colombia Asia decision will either stand or fall on its own merits. This, I thought, was a reasonable analysis of the decision of the Supreme Court in Northern Operating. So I have tried to put across what I think is my view on a limited reading of the decision. I have tried to put across what would be position fallout of this pre-GST and post-GST. I thank you all for giving this patient hearing. I am open to questions. Thank you so much. Put the video.
Thank you, sir. This was a wonderful session. In fact, I had listed a few questions before the beginning of the session. I think I ticked off most of it as you spoke. So there's one question in the chat window. I would request the other participants, if you have any questions, please put it up in the chat window. I can read it out. There's one question on the way forward. If there is a way a review petition can be filed before the Supreme Court to reconsider the matter. What's your thoughts on that?
I don't think a review is maintainable before the Supreme Court, because Supreme Court, normally the review petition is filed if an argument that is too apparent on it has not been considered, etc. But there has been a consideration by the Supreme Court, right or wrong, slightly a different point, but there has been a consideration by the Supreme Court. So maybe in some other matter which goes before the Supreme Court, identical facts or slightly different facts, we can point out that this decision has not maybe considered few points in the manner in which it ought to be considered. I don't think a review would be maintainable. Even if you file a review petition, the fact is that it will go before the same bench, and unlikely that the Supreme Court will consider the review.
Okay. One other question which has come up here is, does it mean all secondments will be subject to GST now?
As of now, the sad answer is yes, possible. Especially with the Schedule 1, etc. being there, it's quite possible that it can get subjected to tax.
Right. So there's one more question. In fact, this was what I was thinking as well. While you did mention that the mode of consideration payment and the mechanism should not really influence whether it should be subject to service tax or not, but it should be whether it's an employer-employee relationship. Having said that, is there a way? Would the answer be different if the Indian company, Indian associate, were to pay salary directly without this cross-charge mechanism? I know there is still a deemed supply concept between associated enterprises, but what is your thought on that?
No, if it is paid, in fact, I remember in some of these cases that were before the tribunal, there were cases where it was paid by the Indian company directly to the bank account of the seconded employee. Some cases it was recovered, in some cases it was not. So that was one of the factors that were considered by the tribunal to say, and that it is really an employee of the Indian company. But then with the way the ruling is given, saying that the economic benefits that are accrued to the group as a whole, etc., will be a method of consideration. I am not too sure whether how that will make a difference in the light of this decision of the Supreme Court. While I agree that would definitely be a relevant point to argue that he is under my control, he is my employee, I pay the salary, I deduct the TDS, I apply the provident fund. The social security is only for a limited purpose because he is there. Therefore, those are all factors that were considered by the tribunal and then held in favor of the assessee.
Right.
But in the light of this decision, you can have an issue even on that.
So would be the pure agent if there was no markup and we do a back-to-back reimbursement.
Absolutely,
I suppose.
absolutely. That again is not considered by the Supreme Court also.
There was another question. Can another bench of the Supreme Court hold a different sort of a decision contrary to what is being held in this case?
Yes, it can. It can. If you point out these issues and then say these have not been considered, etc., definitely the other tribunal, the other equal Supreme Court decision can definitely take a view saying these have not been considered. For example, this also, if I'm not mistaken, it's a 3-member decision. This is a 3-member decision, but I have seen situations where a 2-member decision also says this 3-member have not been considered. Then they refer it to a 3-member to see whether it is really right or not. For example, the cess matter is a classic case where Unicorn and Bajaj Tempo, etc., are all cases where the subsequent Supreme Court takes a different view from the earlier 2 decisions. And then now I think an application has been filed before a 2-member, and the 2-member has referred it to a 3-member. All that is possible. But we should be in a position to point out that these are the relevant points, especially I'm clear as far as consideration is concerned, as well as the exclusion of an employee is concerned. These are all crucial factors that will decide whether there has been a supply of an employee services or not. Once the law mandates that these are to be excluded, the consideration attributable to it, can it be taxed in the guise of another general supply? Because what can be taxed directly cannot be taxed indirectly. So those are all things that needs to be considered by the Supreme Court again.
Right. Sure. So the few questions I'll quickly summarize. Directionally, there is a concern now in terms of tax exposure that is likely to arise, whether it is pre-GST or post-GST. And do we expect show cause notices to start coming probably for service tax or even GST, sort of raising up this matter? And if a tax were paid at an appropriate time, there was an ability for the assessee to claim credit. But now if he paid by virtue as post the Supreme Court ruling for the past years, there is also a loss of input credit. So with this dynamics and the likelihood of show cause notices, what in service tax and GST, what do you reckon would be the best way to maneuver this? I don't know if there is a best way. What would be your thought?
Pre GST regime, I don't think they'll issue any notice now, because the
Okay.
last is 2017. We are now in 2022. So going by the 5 years time limit, etc., I think those periods prior to 2017 would go. Now, only in a cases where the decisions are, either the matters are pending or still to be adjudicated, etc., those are all cases which can come up now. So I don't see an issue of a fresh notice. But those adjudications that are to take place, or whether it's pending in the tribunal, those are all cases where we should really consider whether, unless this matter is doubted and then seen by another bench, etc., if this bench holds this view, then whether we can pay the tax and take credit. Credit should not be a problem according to me, because in terms of sections 140, etc., you should be in a position to claim it as a refund in cash. That should still be possible. Of course, subject to the litigation and all that, that should still be possible. The interest can still be an issue for the period prior to 2017.
Okay.
Post 2017, we still have it. You still have a time to get the notice issued. So notice can still come to you after a couple of 1 year or 2 years. And whether if we want to do it, can we still pay the tax, take the credit, and whether credits will be available? Do you make a claim in 3B straight away today for what happened in 17 to 2022? Can we say that because of the Supreme Court, we take a view and therefore we will now take credit? Those are all issues that needs to be considered.
Right. There were a couple of questions. One on whether a transfer of headcount, which I assume is transfer of employee from the overseas parent to a Indian subsidiary, would that help improve the fact pattern, and will it get still covered under Supreme Court decision? I suppose we can transfer employees if the payroll completely transfers and they're no longer deputation. That probably would be the cleanest, I suppose.
That needs to be seen, because their decision appears to be confined only to secondment, and their decision also seems to apply to a situation where these employees will go back to the original company after the deputation period is over. So once the transfer happens, and if the transfer essentially means that you become a permanent employee of the transferee company for long, then I think that would turn around. It may not be, this decision may not really matter so much.
Okay. There was this one question which is very different from what is being discussed. It's a case of branch office of an Indian company outside India, and the salary of the branch office employees is picked up by the Indian headquarters. So would it get covered under GST reverse charge mechanism? I don't think it is anything to do with secondment, but it's a question which probably would need a greater examination, I suppose.
Possible, because you should always have in mind that this employee-employer relationship and this exclusion continues to be there even in GST.
Right.
Okay, that has not been removed. Now, so when you're talking about employees of a branch office providing service to the headquarters, whether that will be considered as a service provided by a branch to the headquarters or by the employees to their entity. That is where I think we are struggling with this Colombia, Asia, etc. So employees, you don't provide, a branch doesn't provide a service to that extent it provides to an entity. It doesn't provide to a head office. So to that extent, that issue needs to be examined. That so long as the exclusion of an employee-employer is still there, I think we should make use of those exclusions.
Sure. So I'm going to expand the scope a bit while we spoke about service tax and GST. This ruling has an overarching implications for permanent establishment and the income tax you mentioned about it. So it becomes even more difficult to take one position for one law vis-a-vis another position. So there have been established rulings in Morgan Stanley and other things. I suppose this is.
Arun, I was slightly also curious why this decision had come. Incidentally, you would recall there was a decision of the Delhi High Court in Centrica, where incidentally authored, due respects for the same judge, under the Income Tax Act, where he took a view that in terms of this permanent establishments and service arrangements, etc., they still continue to be employees of a foreign entity, and therefore it would be considered as an income arising for that foreign entity in India. Therefore, the tax deducted is right. They in fact confirmed an advance ruling. So that pattern seems to be there even to a larger extent in this decision. So that could have an impact even there. In fact, that's what I was pointing out. If you have disharmony between different tax, then you're going to have a situation where an assessee will act differently for different tax. We are essentially trying to solve that. You can't have, I remember about at least 8-10 years before, the Supreme Court said, try to be consistent with your various acts. What happens in Income Tax Act and what happens in customs should be harmonized with each other.
Right.
Because we normally have a situation, Income Tax Act trying to bring down the expenses as much, and then the Customs Act trying to increase the remittances that goes abroad. So therefore, they were saying that try to harmonize it. Now, this decision seems to open up a different situation altogether.
Right. Right. So there's one last question that has come up while we were discussing this. This is on with the substance of a form test that the Supreme Court has applied in this case. Has Supreme Court gone to the extent of lifting the corporate veil of the companies without recognizing separate identity of entities? What is your thought on this? Has it stretched it to the extent of saying lifting of corporate veil, or are we reading too much into it?
Without saying so, they seem to have done it.
Okay.
See, because once you recognize that there are two different entities, then it has to be whether you are an employee. You can't be an employee of a foreign entity, and then you get seconded here, and then you also considered to be under the control of the Indian entity. Somewhere the match doesn't arise. It doesn't add up. Therefore, in a sense, they seem to have lifted it without saying so.
Great. Thank you so much. That's how many questions we had. This was very, very useful. Really appreciate your time, taking time out to educate us on the subject. Thank you so much.
No problem. Thank you. Thank you, all of you. Thank you so much.
Over to you, Rupa. Are you there?
Yes, sir. Thank you very much, sir, for addressing at this session. And thank you all the participants for your kind participation. Have a great weekend. Thank you, sir, once again.
Thank you so much. God bless you.